Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, earlier this morning in Sydney, the Federal Reserve kept its key interest rate unchanged and signalled it could leave rates alone in the coming months, given that the economic pressures and mild inflation. The Federal Reserve Chairman Jerome Powell issued his strongest statement yet with Wednesday in New York that the central bank has changed its outlook regarding interest rate hikes. The case for raising rates, he went on to say, has weakened somewhat. Looking at the technical implications from the rally is the fact we took out the 72-cent level quite easily and now posts a fresh high since early December of 72.72. It is assessed though that while the level of the RSI at midway point holds above 50 and also the reversal in the MACD gives me a neutral outlook, and now I wait for opportunity for a direction, whether to see if this bull run can continue up to 73 cents or around 74 cents, or have we actually seen a false break and could easily see a drop back towards the region of 71. So let's see in the next 24 hours how the market digests the news and whether we have reversed the bear trend or this is just a bear market rally. The dollar index continues to plummet with the overnight session after the Fed released its decision to hold interest rates between 2.25 and 2.50%. The fact is that the dollar index has fallen further and now looks towards the region 94.40 to 93.40. This in terms has seen the euro break or crush through the level of 1.1455 and now puts on track for a move towards 1.1515 to 1.1580.90 before any bearish call. So yes, back towards this top side where the market fell before. From a technical point also, the MACD and well as the RSI is still supporting this bullish case, and on the flip side a bear case when it comes to the US dollar. Support seen at 114.35. Well, the view for dollar yen is finally coming through, as you can see, as it backs away from the level of 110 and further to the downside and takes out 109. I am looking towards 108.45.55 and reassess from there. I'm not saying to buy, I'd like to reassess and renew the view if the market can rebound from that level. The only concern is by the time we get down to that level, which is only about 40 points now, could see the MACD break down further. So 108.45 may not be a buy zone, so do take some caution in terms of trading from this level. Resistance at this time is 109.55. Well, the pound, of course, has rallied on the back of the Fed this morning, about 60 points. Or, on the flip side, you could say, rebounded away from this trend line at 130.2040 after finding a low of 130.54. Nevertheless, from the pattern I'm looking at, we are still breaking down, and therefore we could still see a challenge of this line of 130.2040. It is only from there a break will give me a view down towards 128, or roughly 127 where I've highlighted it here. Any rallies should be contained now around 132.2045. Gold rallies on further and now claims the target of 1,324 after posting an 8-month high of 1,323. It is assessed that the current picture still could see a further bullish move, but caution because we are overbought and therefore could easily see the market drop back towards the region of 1,310. So I'm taking profit if I long and look for this pullback to ease the market out of its overbought condition. And finishing up with oil, well, the market rallied further overnight, and as you can see, survived the neckline at $52 a barrel. It nearly claimed its target of $55 overnight, posting a 10-week high of $54.95. Now, a break above 55 would give further scope towards $58 as a target. Now, as some of you may know, is the actual target from this inverse head and shoulders is $64. So the bulls at this stage still seem to be happy in terms of this rally. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day ahead.